Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Hello, you're watching Traders Corner. As usual, we're joined by Garth McKenzie. He's founder and editor of Traders Corner. Garth, welcome. Thank you for coming in.
Hi, Stephen. Good to be with you.
Garth, you featured two option structures on the show previously. One was last week, one was back on the 17th of March. Today, you want to show us how to buy some upside participation into the market. Why so?
Yes, that's right. And I know I'm going to apologize to the viewers up front for this. This is quite a complicated show. I mean, I think this is going to probably be one of the most complicated shows we've ever done for Traders Corner. But it's very interesting, and it actually shows you how you can use options creatively to create a situation where you can make money on both the upside and the downside in the market. And that's what I'm doing today. So yes, you're right. We've done two option structures during the last couple of months for the show. They're both on the top 40, and they both expire in June this year. They expire on the 18th of June, which is the futures closeout date for the June futures closeout. The original structure was a put spread structure, which we did back in March, on the 17th of March, and we've been running that structure for the last, 2 months or so. And then last week on the show, we did another option structure where we also looked to put something in place with some downside participation. And in both of the situations, or both of these structures, what it was, we pay away a very small premium, but these option structures allow us to have downside participation with very little risk, almost no risk, if the market continues to rise. So it's quite nice from that point of view. So just to lay the background in terms of these structures and to set out the lay of the land, as it were, let's have a quick look at the chart of the top 40 index now. And I showed this chart on quite a few times on previous episodes of Traders Corner. And last week we pointed out the fact that the market had broken out through this big overhead resistance area at 47,200, and the market had run all the way up to around about 49,000 or just above 49,000. And I said on last week's show that I felt it was quite likely that the market was going to come back and it was likely to retest this area of support at about 47,000. And it's done that during the past week. We actually saw the market trade back just below 47,000 last week, Wednesday. And then it's had a little bit of a bounce since then. But for last week's show, what I did is I put an option structure in place where we looked to try and participate in any downside in the market from 49,000 down to 47,000. In other words, looking for that pullback in the market. And then that profit on that structure was effectively capped at 47,000. So we could make no more money once the market fell below 47,000, but it nevertheless gave us nice downside participation. And if I present that on top, or overlay it onto the top 40 graph, you can see it quite clearly there. So effectively at 49,000, which is that level over there, we started to make money on that structure. And at 47,000, we make our maximum profit. And below 47,000, we can't make any extra money, right? If I present this in a slightly different way, or slightly easier way to comprehend it maybe, have a look at this diagram. What we've got here is along the bottom axis, we've got the levels of the top 40 index. So you can see them illustrated quite clearly over there. And then on the left-hand side here, we've got the profit and loss. So above the line is profit, and below the line is loss. And so the way this structure was created last week was that anywhere between effectively above 49,000, I paid away a premium of 1,396 Rand, and I lost that. Above 50,500, I would begin to lose some money on that structure. But the sweet spot really for us was if the market began to drop below 49,000 at 47,000 and below, then our structure makes its maximum profit. And that profit was 18,600 Rand, and we couldn't make any more money than that. Now what's interesting is that over the past week, we've actually seen the market drop down to just underneath 47,000. Which effectively meant that we got just into that maximum profitable zone for this option structure. Now the thing is, I know a lot of people are going to say, well, why not just take profits then? It's not as simple as that, because options have a variety of different components that construct their pricing: time value, theta, vega, gamma, all these interesting Greek terms which we're not going to go into in any great depth. But the reality is that this is a linear payoff diagram, as I show here, as it would look on the futures closeout on the 18th of June. Now, we're not there yet. We've still got 5 or 6 weeks to go until the futures close out in June. So the fact of the matter is I couldn't have just banked that profit as it is now. I really need to actually run these things out to expiry, and then I need to try and be creative in terms of how I can trade around them and try and protect some of that profit, I suppose, or that theoretical profit, so that we've still got some of it left once the June futures closeout comes about. All right, so that's the one option structure that we did for last week's show. Now, that's all very good and well. It's worked out very nicely for us. I'm very happy with the way things are going with this structure at the moment. Now, what I want to also just hone in on is the structure that we did previously. Now, this is a separate option structure. We did this one on the TV show of the 17th of March. So any viewers who didn't see that show or who would like to see it can actually go back. They can either go on the Business Day TV website, or they can go on my website, traderscorner.co.za, and they can go back and look for the show that we did on the 17th of March. And on that show, we showed and we illustrated how this option structure was created. And effectively, it's a kind of a complicated put spread option structure. But I was long of a put option with 46,500 strike, and then short 2 tranches of puts with a 44,500 and a 43,000.
Does this one complement the other one because it's at much lower levels?
Yes, they do. Absolutely right. That previous structure that I showed you started to make money below 49,000, and it maxed out its profit at 47,000. Yeah. So that, and then you look at this one now. This one only starts to make money from 46,500 and downwards. So when you start to actually look at the two structures together, they actually work very, very nicely. I mean, just quickly focusing on this one before we look at the two in combination with each other, you can see that above 46,500 here, I'd paid away a premium of 2,500 Rand, and that was it. I couldn't lose more than that if the market continued to rally. That was it. That was my premium paid, and I didn't see that money again. But if the market started to trade below 46,500, I started to make money on that structure. And at 44,500 and between 43,000 and 44,000, that's where I would make my maximum profit on this particular option structure. And that maximum profit was 37,500 Rand. So you can see a very, very good risk to reward ratio here, effectively paying out 2,500 Rand with the potential to make 37,500 Rand. So that gives us a risk to reward ratio of about 15 to 1 on this structure as it stands. And then that structure would start to give back some of its profits below 43,000. It would only actually start to make a loss down below 41,000. So it's a very, very nice structure in the sense that it gives us awesome downside participation with very, very little risk if the market continues to go up. Now, if we take a look at these two option structures together, that's where it starts to get quite interesting. So I take this payoff profile and I overlay it with the previous one that we were looking at. And we look at how these two structures would work together. Again, here we've got our options payoff diagram. Again, along the bottom index, we've got the levels of the top 40 index. And then on the left-hand side, we've got the profit and loss illustration. The way it would look is like this now. And it starts to get a lot more intricate and a bit more complicated, but hear me out. That's essentially how our payoff diagram would look at this stage. You can see the green area representing the profitable zone, and then the red areas, those represent potential loss areas, but those are very, very far out on either side of the market. So essentially above 50,500, we'd lose a bit of money.
And this is all up to June the 18th, so you have that limited window anyway.
Exactly. We've got a limited window of time. It's only got about 5 or 6 weeks to go until expiry. But as it stands right now, this is the layer of how both structures overlaid against one another would look. So essentially, between 49,000 and 50,500, I've paid away a premium of 3,896 Rand. So not even 4,000 Rand is what I've paid away. That is less than 1% of the total trading capital that we've got. Almost, it's about 1% of the total trading capital that we've got at our disposal, available to trade with. Our maximum profit on these two together now stands at 56,104, and that would only come about if we saw the market trade down to a level between 43,000 and 44,500. But you can see, essentially, we're profitable all the way in this area here, between 40,000 and 49,000 on our market. We're profitable. At the moment, we're sitting at around about 48,000 on our top 40 index. So we are kind of into that profitable zone now. And I'm sitting in a situation where I say to myself, do I want to just leave this structure as it is, or could I maybe lock a little bit of that profit in and give myself some upside participation should the market bounce from these levels?
So are you not expecting the market to go higher from where it is at the moment?
I'll be very honest with you, I'm not quite sure where the market's going from here, because it's in a funny sort of space. We've held that 47,000 support on the top 40, which we discussed earlier. We are bouncing a little bit, but also what you've got to remember is this time of the year, in my experience, this time, May up until sort of August, can be quite choppy months. It's the Northern Hemisphere winter. The market, in my experience, is very choppy, very difficult, very range-bound, not much fun to trade during the next couple of months. And it's a time of the year where you actually need to be fairly cautious. Capital preservation is key, and you've got to be careful of not trying to force trades and not getting too frustrated at this time of the year. So I know I'm kind of evading your question, but I don't really know whether the market's going up or down here from here. It's a bit of a confusing picture. And the way I look at it, as I say to myself, given that situation, I don't know whether we're going lower, I don't know whether we're going to go higher. You can make arguments for both directions. But what I do know is that if I go along and I buy a little bit against these options now, it gives me the ability to have upside participation as well as downside participation. Then I get the best of all worlds. And in a kind of market like we've got now, where you're not sure whether it's going up or down, that's not a bad place to be. So what I've done this week is I've actually gone long on the IG Markets Top 40 cash product. So this is a product that's exclusive to IG Markets. It's a CFD product that mimics the value of the top 40 index, the spot index. And in this case, they've got different contract sizes. The smallest one that they offer is a contract that represents 2 Rand per point. They also offer a 10 Rand per point and a 50 Rand per point contract. But in order for me to do this effectively, what I've done is I've gone long of 3 contracts of the 2 Rand per point top 40 cash product. So in essence, what that means is I've gone long of 6 Rand per point. So for every 1 point that the top 40 index were to rise, I can make 6 Rand. For every 1 point that it falls, I will lose 6 Rand per point. But the point is that I've got all of this downside participation to the, call it the left-hand side of that diagram, if you like. I've got plenty of downside protection. I want to try and also now buy myself a little bit of upside.
And this is per point above 48,000?
Yes, that's right. And you can see that illustrated with that white line on the graph there. So that's a perfect linear situation. Anything beyond 48,000, that structure or those CFDs will start to make money. And anything below 48,000, those CFDs will then start to lose money. But if we take all of these payoffs now and we actually overlay them against one another to try and simplify the diagram, it now looks like that. And I mean, I know it's beginning to look a bit like a mountain range. But this is where it gets very interesting with these options, because what I've essentially done now is I've actually put myself in a position where, irrespective of where the market goes from here, whether it goes up or down, I'm likely to make money on these options. Only below about 41,800 now, we would be in some trouble. And that's a very long way. I mean, given that we're trading at about 48,000 now, that's a very, very long way for the market to have to go down. Then we would potentially run into some trouble. I can hedge that if I need to. But the point is that you can see all of these different peaks and troughs in terms of where this whole structure plays out now. So at 49,000, we would actually make the least amount of money. Up at 51,500, we'll make around about 11,000 Rand out of this. Down at 47,000, we would come out with a profit of around 10,000 Rand. And then our maximum profit that we could ever make on this thing would be at 44,500 on the top 40 index. We would then make a profit of about 35,000 Rand. The thing is that I quite like this now because it gives me participation on both the left-hand side and the right-hand side. If the market goes higher, we make money. If the market goes lower, we make money. And this is where options can become very, very useful, and you can create these types of payoff profiles for yourself.
So what does the overall portfolio look like now then, Garth?
All right, it's looking, so before we get to that, I just want to quickly show you on this top 40 index diagram on the chart here you can see our payoff profile again. Sorry, just illustrated slightly differently. And you can see, irrespective of now where this top 40 index goes in June, we're going to make some money on it. You asked about the overall portfolio. This is how it looks. These are the positions we've got open. We've got the 2 option structures, which we've discussed now, with the respective premiums that we've paid away on those. And then I've gone long 3 of these top 40 cash products at 48,000 today. So our portfolio value is still sitting where it was last week, 317,000 Rand. We are up around about 27% for the year to date. And the nice thing is we've kind of got participation, profitable participation now, whether the market goes up or down from here. So it's quite a comfortable place to be. I must say I can sleep well at night with this type of position that we've got on our portfolio.
Okay, I think we're over time. Details of the next courses coming up, Garth?
All right, so I've got 2 courses coming up in early June in Johannesburg, an Understanding CFD's course on the 4th of June and a High Probability Trading course on the 6th of June. Anybody that would like to attend either of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the information.
Great, Garth, that's where we have to leave it. Thank you very much.
Thanks.
That, of course, is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.